Hey guys, it's Will here. Thought I'd go through the markets. I want to talk about a specific scan that I'm using to find potential things to buy, stocks, ETFs, sectors, whatever you're looking at. So let's get into it. If we look at S&P 500, we've had, I'll turn on the lines here. We've had a break of this downtrend and now we're establishing higher lows here and there's a bit of an uptrend. We kind of got close to the 200-day moving average. So if we pull back or go to a weekly chart, we're kind of reaching that touch point of this downtrend here. Let me just zoom in a bit. So there's a line across here and we're getting close to that again in the 50-day moving average, 50-week. So there could be a bounce off of that or, somewhere around there. But a lot of things are in that similar situation. IWM, higher lows, broke of a downtrend, kind of right at the 200, stuck there. Dow Jones has done better. We broke this longer term downtrend at the peaks here, and we're above the 200-day moving average, and we kind of broke above that. So on the momentum, you can see when you get up really high, it comes back down, and we're up pretty high, even higher than the last time. So that is a risk in that sense, and you can see that these histograms show declining momentum. So the space between these two lines, the PPO and the moving average, are getting pretty small, and it's down sloping here. NASDAQ, it's created a higher low here, but and it has some room before it hits that trend line. And it's a bit better situation in terms of the momentum. It's not overly extended too high on the MACD or price percent oscillator. The VIX keeps going down, which is weird in the sense that, there is a lot of volatility, but it's getting down pretty low. So, it could go further, of course, but that's been an interesting thing in the terms of the VIX because there's been pretty good swings in the markets. But what I wanted to talk about as the main section is using scans to find entry points, which would be the rough areas that you'd want to get in to start looking at. And that's when you break a downtrend and you have higher lows established. I'm using TC2000 here. It's really excellent software. If you want to pick up a free trial or $25 off your subscription, check out the link in the description below. I've got the gold plan and US real-time data instead of like the 15-minute delay. So what I want to talk about, there's different ways you can sort of locate these, but when you get a price percent or a MACD crossover here, and it's fairly low below the zero line, that can be a reversal point. Another spot is when you get up above zero price percent oscillator. That tends to be at the 50-day moving average. So you can sort of ignore the parts that are below zero if you wanted to, and wait till it gets above zero or above the 50-day moving average. But I've got this scan I'll show you for higher lows, and it's not perfect, and like I said, if you want to indicate, you can find stocks that have a price percent oscillator crossover. So what that means is, if I click on this down arrow here and say create condition, it'll say price percent greater than zero. But if I click on this, I can say crossing up the exponential moving average. So that's what you want to pick. And so that'll give you that that'll give you that first signal that we've crossed. So you can use that in your scans. So I've got this one scan, I'll just show you quickly here, price percent oscillator crossing up and I said within the last 10 bars. So usually the first cross is not exactly where I would want to get in because it hasn't established higher lows, but you could say, within 5 or 10 bars or something, just to give you, you can put things in a watch list once you find them, but that just gives you that first potential crossover spot. And you can see here, like where we crossed over was the beginning of this uptrend, and when it crossed up here was pretty much the end. So it gives you that rough period of time. But I also added that it's above, the price percent oscillator is above the moving average as well. So even though it's crossed recently, it still has to be above And that gives me a whole bunch of ETFs. So this one's medical devices. So you can see that it crossed and it's still above, but it crossed quite a while ago because I put 10 periods. So that'll give you, it'll put you in the right spot. So then what you're going to do is put a little line under the recent lows and see if they're rising. If they are, say it's too far, like say it's here and this is where your recent one is, you would wait for a bit of a pullback, and then use that as your entry point once you get a day that's above that particular, like an update after that pullback there. Sometimes a pullback, if it's like close to the 8 EMA, might not be really a low pivot point, like a inflection point. Like if you look here, right here, I could have drawn a line underneath these ones that were kind of just, above the 8 EMA, but when it pulled back down, I would have got stopped out, which is fine. But the ones that are, stronger, I guess you could say, inflection points or low points are ones that come down, below the 8 EMA. So, like if you put this pullback here, you would have got stopped out right there. If you use this one, because it didn't really have another low, you would have gotten all the way down here and then back up, and then it would have come back down here. So it's not 100% perfect science, but you can always get back in again. Like if you, if you find that it's back up, quickly, you can potentially get back in again. But these ones here are below the 8 EMA quite a bit, and so those are definitely inflection points. This one is questionable because it's very close here, but so from there you could put them in a watch list, like something that you look at. There's other ways you could write code that that you want to see something like where the close is higher than the previous close or something like that. It's not 100% perfect, as I mentioned. So let's look at XLV. Higher lows established. You had a bit of a candle closing above this pullback here, but the the histogram is showing a decline in momentum here, so it might be losing its momentum. You can see that you'd want to get in earlier here, like usually below or close to zero on the PPO, when the ideal spot, like when especially it crosses the 50, and it might be getting to the point where it might fail at this point, but the price did go up, and that's a bit of a pullback here, so you could use that as your stop. So what I'm trying to say with this particular video is look for higher lows and getting in right after a bounce and using that that low as your stop, like even mental. So this tab here, the nice thing with TC2000, you've got these tabs with different sets of stocks and ETFs and different scans you can have in it. So a lot of data in a small space. But this one is the crossover and the PPO is above, and you can change how, 10 bars gives you, it's more time when the crossover happened. But so you can alter that depending on how far along you want to be. But when you go a bit further, that gives you the chance that a lot of times there's a pullback and then another higher low. So sometimes the first cross, you're going to get this pull down here, pull back, but that's fine. But if you want to wait a bit longer, it doesn't have to be right at the crossover, but that'll give you that one option so that you're getting in relatively soon to the crossover, and you can watch to make sure. So if you notice that there's a downtrend, like from previous price action, you could draw that line and you could put a right click on this line, and you could say set alert, and that way you'll know when it crosses. Or you could set it at the 50. Like, so if you're down here pulling back and you didn't want to sit there watching, you could say when it crosses the 50 or that downtrend line as your as an alert, let's say. Or when this crosses 0, like there's different things you can do. But the other scan that I have is called higher lows, and I actually wrote a formula. This is not perfect, set in stone. You can change this if you want. But the way it works is in TC2000 there's this PCF, personal formula, that you can use to look for things. So what I said here was the minimum of the lows for the last 10 bars, trading days. The minimum for the last 10 is greater than the minimum from 10 to and 15 from there. So that means that what I'm trying to say is this low is higher than the previous low. But the time in terms of the 10 or the 15, that's all up for debate. And you're not going to get every single one because it depends on where the lows occurred, if they were close together or whatever happened. So, but also, so the minimum, the low is from one low is greater than a previous low. And also the close is greater than the 8 EMA. So I wanted the close to be above the 8 EMA. So if you have, like say I had this situation where you had this low, I want to make sure that the candle is above, that closed above the 8 EMA. It's not perfect, but it's just a way to show, because sometimes you'll get like ETFs or stocks that are in a downtrend, like a pullback still. So I wanted to make sure it was above the 8 EMA. It's not, like I said, a perfect scan, but so if we take a look at some of the stuff in here, you can see we've got higher lows. We're a bit further away from this one. You know, it depends if you want to consider that to be a low or not, but it's still above the 8 EMA, so it's not super a big pullback or anything. But if we look at staples, they've been doing good with all the inflation. You can see where it crossed over here. If you cross over here, then you keep an eye on it for a higher low. That's probably a good way to do it. So if you're in this situation where it crossed and you're sort of debating whether to get in right here, you could draw a line, wait for it to cross that, or you see this little pullback here. So there's little scans you can do, like if one day is down, the next is up, or if this close is greater than the previous close, and that would give you a sense that it's going back up. So there's different ways you could trigger an alert on that, but basically you're going to catch it when it crosses. And when the crossovers happen fairly low down, that can be a good sign of a reversal. Sometimes there's crossovers like underneath the zero line, but they're not doing great for various reasons. There's usually, sometimes they're stuck behind the 50 or 200 day, below the 50 or 200 day moving average, or they just kind of get hung up around there. But when it comes down quite low, like this one here, you see how it came way down, pulled up, and it didn't make it. So if you drew a line across that, you would wait until you broke that, and you want to see higher lows. So you'd be way over here, probably, before you got in. And that coincides with the zero line again. You can get in sooner, like down here when this happens with a higher low right here, you get in a lot sooner. That's the ideal scenario. PBJ is like food and beverage. You can see we had this consolidation period. There's a low right there, so we got a green volatility stop and it's heading up. It hasn't quite crossed over, and it's also crossing at a high point. So ideally, like you see here, it crosses very low, goes all the way up, crosses, goes all the way down. Big long swings are perfect for swing trading, that type of thing. Like look at this one here, boom, boom. And this one, like if you drew a line across this, you probably wouldn't have got in right there because you're waiting for it to cross that downtrend. But some of these, you're not going to win every 100%. Like there's going to be the odd false signal and stuff like that. But you can use other things. If you wanted to wait until the 50 day is above the 50, or the 50 days upsloping, you're going to eliminate a lot of the stuff underneath. But then you also will miss the big swing when it goes way down and comes back. So because if you wait till it gets up to the 50, you've missed a certain amount. But you definitely can do that. You have to kind of figure out what you want to do. The TLT is bonds, and it's starting to break this downtrend and starting to come up. It's got a bit of a higher low here, and we're still in a nice uptrend here. But we'll see if this can continue. But ideally, you get in right after this low, which is below the 80 EMA. You see these red dots, and you get back in there. So the trick is if you get in further along after the bounce, after the pivot point, it's you don't have a great spot for your stop in terms of letting it go down a bit and come back up. So if you see here, like if you're going to sell every time it bounced, you're going to be bounced out a lot. But if you had your low here, you would have stayed in because this pivot pullback didn't breach that low there. So you can use a line as well, like a trend line. But this way, a trend line is nice because every time you touch it, it doesn't quite, you don't have to worry about all these dots like the red dot volatility stops, or if it gets below the 80 MA, you can sort of stay in the trade but in a longer period. Same with this one here. You don't necessarily sell when you see a few green dots like green volatility stops. You're not really above the 80 MA. Here you got a little bit above the 80 MA, but you still had this downtrend. So really it took until you broke this trend here. It's a good entry point. So you take a screenshot if you want to use this formula. Like I said, you can play around with the 10 and the 15 values because you know, it's just a matter of how much space in between these different lows. You know, it won't be perfect, but there's, like I said, there's other things with the crossover of the price percent oscillator. Let's scroll down a bit. Retail XRT. So we had a crossover way back here. Once you get a bit higher lows, you can get in here somewhere. But this pullback you could stay in because your low would have been, your stop would have been down here. And then when it gets to this point, your stop is here. And now you have potentially a pivot point right here. And that's an entry point potentially. And you've got your stop there. So you're seeing higher lows and you're letting the volatility up and down kind of play out without getting in and out all the time. I think that's all I want to say. If you really want to get TC2000, I can't highly recommend it enough. I got a link in the description. You'll get $25 off your subscription or free trial. And a lot of you guys have taken up that offer. I hope you like it. And you know, I love this. I've got alerts and scans and different tabs here, like different views. I'll just quickly show you again. I've got 9 sectors. And I can quickly see what's doing great. Like obviously energy, it's a little bit high now, but then you've got industrials doing really well. Healthcare, staples is doing pretty good. Utilities is coming up. The ones like this is the 50 above the 200 day. That's the strongest one. The other ones aren't quite at that point yet. So we'll see, you know, it's pretty high up in terms of its, you know, reached a previous peak in June. So that's a bit extended, but you can go to weekly as well. They all change. And basically, you know, it's a quick way to see what sectors are doing good and that. So there's different views that you can have on each of these tabs. All right, guys, we'll talk to you in the next video. Good luck.